If something happened to you tomorrow, would your family be financially okay? It's not a fun question. As dads, we'd rather not think about it. But here's the truth: life insurance isn't really for you. It's one final paycheck for the people you love the most. In this video, I'm going to walk you through exactly how I think about life insurance as a Canadian dad, how much you probably need, how to calculate it, and the mistakes that can leave families seriously underinsured. If you're new here, welcome to Canadian Finance Dad. Every week, I share practical money tips and real experiences from my journey as a Canadian dad. If that's your kind of content, I'd really appreciate it if you subscribed. So let's start. What is life insurance actually for? A lot of people think that life insurance is supposed to make your family rich. That's not the goal. The goal is much simpler: to replace your income long enough for your family to adjust. Think about everything your income currently pays for: the mortgage, groceries, utilities, daycare, RESP contributions, vacations, future education, daily living expenses. If your income disappeared overnight, those bills won't disappear with it. That's exactly what life insurance is designed to solve. The biggest mistake most parents make: many people buy whatever amount their employer offers. Maybe 1 year's salary, maybe two, maybe three. It sounds like a lot until you do the math. Imagine earning $120,000 per year. Your employer gives you two times your salary, that's $240,000. Sounds great, but your family spends $80,000 a year. That money is gone in only 3 years. Your child could still be in elementary school. That's why employer coverage is a great bonus, but it shouldn't be your entire plan. So here's my simple rule. Here's the framework I like. Start with these 4 questions. How much mortgage would still be left? Second, how many years of income would your family need? And third, do you want to pay for your children's education in the future? And then finally, think about final expenses. Stuff like legal fees, funeral costs, unexpected bills. They can easily add up to tens of thousands of dollars. When you add everything together, you'll usually end up needing much more coverage than you first expected. So here's a simple example. Let's imagine a Canadian family. They still owe $700,000 on their mortgage. They want $500,000 to replace income while the kids grow up, and another $100,000 for future education, and another $25,000 for final expenses. That's over $1.3 million. At first, that number sounds huge, but when you break it down, it's simply replacing financial responsibilities that honestly still already exist. Now, here's why I prefer term insurance. For most young families, term life insurance is usually the option I would look at first. Why? Because it's straightforward. You can buy coverage for a fixed number of years, usually 10, 20, or 30 years. During the years your family depends on you the most. Once your mortgage is smaller, your investments have grown, your kids are adults, you may need much less insurance than you did before. Everyone's situation is different, but that's why term insurance is often a good fit for young families. Also, don't forget stay-at-home parents. One thing people often overlook is stay-at-home parents also need life insurance, even if they don't earn an income. Think about everything they do: childcare, cooking, cleaning, appointments, school pickups. If something happened, many of those responsibilities would suddenly become paid expenses. Life insurance isn't only about replacing a salary, sometimes it's about replacing everything that a person does for the family. My advice to every dad: here's what I'd encourage every dad to do this week. Sit down with your partner. Ask one single question. It's a hard question. If I wasn't here tomorrow, would you be financially okay? If the answer isn't a confident yes, it's worth reviewing your insurance. Not because you're expecting the worst, but because planning ahead is one of the greatest acts of love you can give your family. I'd love to hear from you in the comments. Do you currently have life insurance, or is it something you've been meaning to look into? And if you found this helpful, don't forget to subscribe to Canadian Finance Dad. Every week, I share practical money tips to help Canadian parents build a stronger financial future. And I see you in the next one.